So it's really the youth population that basically has multiple accounts in multiple institutions, then I imagine. If you think about it from a more, let's say, primacy, like I can imagine it's still the primary bank that you've banked with for, let's say, yourself growing up during your study time when you raise your family. Have you also seen the pattern there that they tap out because they have better alternatives?
Yes, absolutely. That's exactly what I meant. Because now, I mean, it is funny because we no longer compete as banks. We no longer compete for the customers. We actually compete on the transaction types because it is so easy to, change or hop from one bank to another. So I'll give you an example. During the summer times, usually fintechs or banks compete for forex rates, right? Who gives the better rates? Because people tend to travel and etc. Or for example, international spend. Now we're no longer competing for the customer because the customer comes and bank or use this remittance, for example, solution, or use this multi-currency card or payment solution for the time that they need it, and then they hop to and then they leave it once the offer is or the need is no longer there. So you're not really competing for customer acquisition. You're really competing for a specific portion or a market share in that transaction type pool.
Yeah.
You know what I mean? So it's a very, very interesting situation.